Welcome back to Market Cafe right here on ET Now, and let's talk about some of the earnings that will be in focus today. And Tata Motors did come out with its numbers on Friday, wherein this time around for their passenger vehicle division, we have seen a weak set of numbers coming in because on the bottom line, the company has reported a loss of 6,368 crores versus a profit of 3,521 crores, though the revenue from operations is actually down almost 13%. But along with that, in terms of the EBITDA as well, that's an EBITDA loss operationally that the company has reported for the tune of 1,043 odd crores. But the big headline for Tata Motors remains to be their JLR division guidance, because that has been cut down sharply from 5 to 7% of EBIT margin guidance for FY26. That has been now brought down lower to just 0 to 2%. And along with that, the company is also saying that their free cash will now experience an outflow to the tune of 2.2 billion pounds to 2.5 billion pounds in FY26 versus just a zero figure that they were expecting earlier. Along with that, in terms of the EBIT margin number this time around, that seemed to be in negative of 8.6 odd percent versus 4% in Q1 of FY26. So a weak performance herein. But in terms of the commentary as well, the management highlighted that yes, of course, this has been a washout quarter on the back of the cyber attack, but the kind of pressure remains to be in the European market. The tariff related impact is already being seen into the numbers, but they are hopeful that Q3 will be better, and Q4 in terms of the volumes they are expecting that to be normal when it comes to Tata Motors JLR numbers. When it comes to the India business, there the company has performed very well in terms of the margin specifically, because that has seen an expansion from 4% in Q1 to 5.8% this time around. The margins along with that, that has seen to be improving, and the management is optimistic of a growth outlook going ahead, where they're saying that they expect the overall an all-round performance and a recovery in the second half of H2. When it comes to their overall guidance, the company is also highlighting that they are expecting a double-digit growth guidance for the India business with the full year guidance of 5%. Elara has actually come out with a note. They are recommending a sell with a target price of 363 rupees. They're saying that the India growth to be driven by the uplift in the customer sentiment. The key monitorables remains to be the further deterioration in demand and supply chain turmoil for their JLR division. So going ahead for Tata Motors, new product launches for the India business is something that will drive the business, but the JLR pressure continues to be seen when it comes to the guidance as well, is what the management is indicating.
All right, so that's about Tata Motors, but let's move on and talk about another earnings candidate, which is Marico. Now, it reported a mixed set of numbers for the second quarter of this fiscal with inline revenue and PAT,